Hello, hello. It is Friday. Still in the morning, but it's Friday. It's about 11:25. Going live so that way we can discuss the trades that we had on. We had some trades on from I think a week ago. We need to discuss those. And I definitely wanted to highlight the vertical credit spreads class we're having tomorrow. Live training, live on Zoom, but I'll be there, which makes it live. It's not just videos, right? It's going to be me live in living color. Y'all remember that show? Anybody? Y'all too young for that show? Live and in living color. All right, all right, all right. So, yesterday we went live and we had to work through our microphone issues. I didn't realize that I needed to charge the part that plugs into my iPad, not just the microphone, but it's charged up now, but I forgot it in my room. So I'm not going to get it because I'm going to go live and we'll probably be here probably 15 minutes, but I wanted to make sure that we cover the things we need to cover. Yes, welcome, welcome. Hello, everybody. Hello, hello, everybody. Wonderful having you. Wonderful having you. Let's go look. I'm going to share my screen so we can go and look at. Um, well, I thought I was sharing my screen. Let's try again. Present. Yes. You have to pick the right buttons. Be smarter than the technology. Absolutely. That's what we're doing. Come on, come on, come on. I need you to go. The people are waiting. The people are waiting. It is going so slow. Ah, yeah, yeah. Screen one. We're going to allow. Yes. Yes, yes. Now let me look on my tablet so that way I can see. I can see what you see. Right now, if I only have it on one screen, then I can't see what you see. And then things could be going on and I could be missing it because I don't see it. Okay, cool. We are now in the account. We can show here, this is a sim, paper trading, TD Ameritrade. Yes, I really like the sim in TD Ameritrade or Thinkorswim. They're the same kind of, not really. I did get a message that Schwab, they're going to try to move us over to Schwab. We'll see how that happens. So let's look at each trade we have. AMC, we had our 100 shares, and we have a covered call of 5.5 covered call. Well, because price is below, the mark price is 4.99 at this point, and this is going to expire next Friday, but we've got enough of a profit. Notice this P&L percent here is 58%. And I tell you that if it gets past 50%, I'm cool with just shutting it off and using my money or re-entering or something for the next go round. So right click on it. We're buying back. Yep, we're buying back at 50% profit, taking our money off the table, taking our shares off the table because this is a covered call using shares. We had a covered call using shares. All right, so we close that up or we at least put the order in. Oh, I need to adjust it now because it put in a different price than what it actually needs. So we're going to buy it back for $7. We collected $17 when we entered this trade. We're buying it back for $7. That is a 50%, over a 50% change or keeping over 50% of the profits. As a seller, that's what you do. You enter for one price and you want to buy back at a lower price or let it expire worthless. You want the premiums to decrease when you're a seller. It's a difference between the sellers and the buyers. You want the premiums to decrease when you're a seller. All right, so we took care of the AMC trade. Now let's go look at our Amazon put credit spread and a call credit spread that we have going. They're actually expiring today as well. May 19th is today. So these are going to expire today. The price is 116 currently, and we need the price to end between 112 and 119. We could leave this like it is. We do see that we've got over 80% profit. we could just leave it for the rest of the day and save our money on the closing fees, because when you close it manually, they do charge you 65 cents per leg. Um, or you can leave it and let it run on, see what the end gonna be, or you can close it now, grab back your buying power right away. That way you don't have to be concerned about whether there's a run up at the end or something like that going on. I would look at, so this is 116 and the call is at 119. I would go check the ATR on, I don't know if I have the study here, the ATR on the chart to see, well, not just that. Let me do not that. I'm going to look someplace else. So I'm going to look at the trade and I'm going to look at today and I will look at this expected move over here. This should be Amazon, AMZN. You can look at this expected move or the plus or minus over here in the corner, 1.2. So that means it's expected to move about 1.2 up and down. 1.2 up puts us at 118. 1.2 down puts us at 114. So the chances of this doing anything is low. So I'm just going to leave it. I'm just going to leave it. The money we took in, we can't, that one's gone. The money we took in here was $15. And if we were to close it right now, we would pay $3 to close it, or we can leave it. Do we think it's going to go up to $119 by the end of the day? Don't know. If this is the call you have when you're a seller. I'm going to actually put in a close order because why not? We could just leave it, but if you don't want to have a good trade going, and then at the end of the day, Amazon decides, it's ready to move, and it's an OPEX day too, which means a bunch of people are closing out their monthly trades and opening new ones. Before you know it, your good trade is no longer good. Let's close it. Be safe than sorry. Better be safe than sorry. Alrighty, EOSE. I need to put this on a different screen. So there we go. So we can see we have a covered call on EOSE. We had 100 shares at $2.19. We did a covered call for $3. It is still below that. It actually doesn't expire until next Friday, but we're at 50% profit. So since we're at 50% profit, I'm putting in the order to close it. Another profitable trade. Let me see. You got to put in the $5 there because it doesn't go in the increments of $1. So instead of putting in the 10, we took in 15. I don't want to close it with 10, even though that would be a 30% return on the money. That would be fine. I'm putting in $5 and we'll see how that goes. Okay. Home Depot. We had Home Depot. I think this was from something else. Those are Home Depot trades. I had some earnings related trades that I was looking at. I was using my simulated account to check on how earnings stuff would run. And that's a good place. Anytime that you have a strategy that you're working on and you're not real sure about it, please use your sim. Okay, use your sim. Don't be jumping off into live and spending money. Just use your sim. Once you get your confidence up, go ahead and go live with it when you're ready. Looking at the GIS, General Mills. This General Mills trade was actually doing pretty decent the other day. And now it's really good, 87.5. It's weird that this looks like, it says it's up 61%, but this call, it's expiring today. So I'm going to go ahead and look at closing it. Let me see, what did we take in profits? We received $117, looks like, when we entered, and now it's worth 45. Oh yeah, we're closing this up, especially because the price is now a little bit into our spread, and we're going to go ahead and just close this for our $45. We received 117. We're buying it back for $40, which means we're keeping $70 of that particular trade. Sounds like another good green profitable trade. Yes, yes, yes. Another profitable trade. Put the order in. INTC. This one actually expires today, and it is currently not profitable. Okay, so we're looking at 29 call 29.5, which means it's between those two. It's between 29. Actually, it's above 29.5, so it is not between those two. This 29.5 means that's what we wanted to say below those numbers, but now it's at 29.7. So this trade, because it's 50-cent spread between 29 and 29.5, it's 50 cent. That means it's a $50 trade. We collected $29. It is now going to be worth 40 something. Yep, 47, which means this trade is now, we collected 29. We're going to have to pay 47, which means $18 in the red, $18 in the red, but I'm going to leave that like it is. I'm actually going to close it because if you leave a credit spread open and one of these is in the money, then you can be assigned the shares. And if your account can hold that, it will assign the shares, give you the 100. Sometimes it'll just subtract it from your margin money or whatever. But the way you can avoid that is by setting the closure order for yourself. That way you don't leave it for the broker to see. This says ITM, which means it's in the money. You don't leave it for the broker to decide what to do. You go ahead and make your own decision of what to do. This is a $19 loss, but notice we've made a whole bunch of money up there above us. So you keep track of what you've made and what you've not made, and then the difference between those two is your profits. The whole plan is that hopefully you've made more than you've lost. So we have 100 shares of JD. I think we got these last week from our JD trade that we had, and we had a put credit spread or something, and we ended up with shares on JD. We could go and do a covered call on JD. We can go look and see. Now 36.5 is what we got the shares at. Let's go see what JD is doing on a covered calls. From a covered call standpoint, we need to get above 36.5, right? We got to get at least at or above what we paid for them. When you're doing a covered call, you need to get at or above what you paid for it. 36.5, we paid for the shares. We could do the same strike for $42 of collateral, or we can go up $50 or 50 cents for next week and collect that. I'm fine with going up 50 cents because if they, the price goes up and they snatch them away, you'll be like, okay, well, at least I got more than what I paid for it, right? If you paid 36.5 and they sell them for 37, right? If you paid 36.5 and they sold them for 37, that extra $50 is yours. You paid 36.5, they sold them for 37. The difference between those two is your money. Your money. Kellogg. Oh, our Kellogg trade turned around. Last week when we looked at our Kellogg trade, it wasn't doing as well. So it's expiring today too, but it's at $68.99. I'm probably going to go ahead and close it manually. That way I don't have to think about whether or not it is doing, if it's going to run back up to my price. I'm going to go ahead and select these two and create the closing order. Oh, we're paying $3 to get it. We collected 35 and we're paying $3 to get out. We collected $35 for this trade. For us to get out of it, we're buying it back for $3. We collected 35, we're paying $3, which means the $32 is our money that we get to keep. We collected, the broker gave us $35 for this trade. When we get ready to get out of it, we're paying the broker $3 saying, I want you to let me out. Here's my $3 to let me out the door. So the difference between those two is our money, the $32. Okay, so I put that on. Palantir, that's not till June the 2nd, and I'm thinking that I'm not sure how that got in there anyway. Roblox. The Roblox trade is expiring today as well. We got a bunch of stuff expiring today. Roblox is expiring today. We have 39.540, and it is currently right between the two strikes. It's right between 39.5 and 40. So we are partway breached. We can look at two things. Let's check the chart, see what Roblox looks like it's doing for the day. That may be a way to tell you, is it moving down today? Is it running up today? That way we can see maybe what we'll want to do with it. Can see what we might want to do with it. Where are we at, Roblox? Oh, Roblox is going down today, which might be in our favor because our trade, we need it below 39.5. Our trade says we need it below 39.5 call. So I'm just may leave that one at this point. Roblox might be moving in our direction. It's something you'd want to watch through the day and then come back and check on before the market closes. You keep an eye on this. This is one of those ones you watch closely. And if you need to close it up, you do. The difference between these two is $50. So this is a $50 spread. We collected $23 when we entered this trade. It is now worth $25. So it's only worth a little bit more than what yeah, we collected we collected $17. There we go. We collected $17 when we entered this trade. It is now worth 24. So we're $7. Oh, right there, $7 in the hole or $7 in the red. So definitely you want to keep your eye on that one today. I won't do anything with that right now. It's just that's on a watch. A watch. Schwab, May 19th is another one we have for today. Looks like 49.5 call credit spread, and it is through our strikes. So we're going to need to close this one up. Notice you see this ITM, which means it is in the money, in the money. It's another one that is now breached. Let's go ahead and close it, pay the money to exit and get out of it before we wait till the end of the day, hoping the broker doesn't assign us the shares. We don't want that. We collected, oh, it went away. It's going to say we collected about $25 and we're paying $45 to get out. Okay, all kind of stuff. Ding, ding. And then our Zim. Zim was one we had. We were doing covered calls on Zim. So let's go see. We've got Zim for $22. And let's go see what we can do for a covered call on Zim. We need to do at least $22 on Zim. Now look at here. The money is not up here in the 22 range, but you should not go lower. I mean, you can pick what you want, but you should not go lower than what you paid for the shares. Because if you do and you get called away, you're going to basically sell your shares for less than what you paid for them. That isn't what you want, right? 22.5 out in the middle of June is paying $10 as a covered call, $9. You could pay that, or you could just hold on to your shares. I mean, you don't have to do the covered call on them. You can, but you're thinking, I'm waiting till June. I'm going to collect the money right away. So when you enter these trades, they give you the $10 right now. So the $10 can be used on something else, but your shares are tied up. Let's see what June 23rd may have to offer. If it's got anything better, we may go out a week. 22.5. Nope, it's not offering anything better. Not offering anything better. End of June, 22.5. Still offering about $9. Well, I might as well do it on June 16th if I'm going to get the same amount of money, right? June 16th. Let's just go back to there, 22.5. Collect our $9, confirm and send. When you have shares and you're doing a covered call, basically they're just sitting in your account chilling. So for you to make money while they're just sitting there, it makes a few dollars off of them. It's almost like if you have an extra car sitting outside, you might as well make money off of it while it just sits there. No reason for it to just sit there. Put it on Turo or whatever the things y'all do for people do for using extra cars. Put it on there. Put it on there. Okay, so we got a couple things working here. Our GIS. Oh, this is good. We don't have to pay $40 to exit it. We can pay less to exit it. Looks like $33 will exit that General Mills trade instead of $40. That's good. We're going to pay less to buy our way out. Works for me. And we're waiting for the Kellogg's trade to pick up. All righty. So we've gone through, you notice how many credit spreads I've talked about here, right? And in the credit spreads, definitely keep in mind that I want to stop sharing. Oh, there we go. Credit spreads. I talked kind of quickly through the different things and the prices and where is the price and da da da. but there's a lot more to that, right? There's a whole lot more to that. As you see as the little ticker tape running across the bottom, we're doing a vertical credit spreads class tomorrow. A live training tomorrow, which is May 20th. We're teaching tomorrow. It's only a day away. Yes, we're teaching on it tomorrow. So if you want to know more about credit spreads, you're going to need to sign up and show up tomorrow. The address is there, bit.ly/credit spreads. You can get signed up. Come on and hang out with us for a few hours, learn some stuff, get a way to earn weekly money from the market. We're taking our money from the market, right? They giving it, we taking it. Yes, yes. But there's strategy that must be included. You can't just throw up, used to be, I think back in 2021, 2020 and 2021, you could get into anything and you made money because the market just ran up and up and up. That ain't happening this year. Didn't happen last year either. You need some strategies. That's with the K. You need some strategies now to help you make consistent income. And I'm here to help you. I want to be your coach. I'll help you get yourself where you're making some consistent money. That's what we're after. Consistent money. Okay? So, it's been great hanging out with y'all. If you got any questions, please find me in the Facebook group, Educator to Trader Facebook group. I'm on Instagram, Educator to Trader. I am Arlissa. I am on Twitter. I am on TikTok. Yes. Just look around for me. You'll find me. I'm everywhere. Educator to Trader. I'm all over the place. Okay. I will talk to you all soon in a video again. See you later. Bye. It's been great hanging out with y'all.